Hello, thank you for visiting my YouTube channel. This is Mark Mamon, and I'm with eXp Realty, a realtor of the greater Seattle, Washington area. Today I'm going to talk to you about the home buying process and what are the steps involved. Before I get into the steps to the home buying process, if you could please hit the subscribe button, like, and once I'm done with the video, do comment and tell me what you think. That way I can continue to put out great and relevant content for you, my viewers. Okay, the first step is getting pre-approved along with finding a realtor to help you in your home search. So, before you start home shopping, it's important to talk to a financial institution about getting pre-approved for a home, especially in a competitive marketplace. This may help expedite the home buying process, and when it's time to make an offer, your offer may be more appealing if you have a pre-approval and your financial details in order. Once your lender helps you get pre-approved, you know what you can afford. Okay, so you've been pre-approved. Now it's time to work with the realtor. A realtor, like myself, is a trusted advisor. I help you understand some of the details of the real estate market you are shopping for a home in. I often volunteer, work, and live in the very same communities as well that I like to help my buyers shop for a home in also. So I will guide you through the process. I understand the complicated nuances of a real estate transaction, and my network of local contacts is there to help you through your home buying process as well. So again, once you've gotten pre-approved, find a realtor. You can reach out to me as soon as you get done with this video. And essentially after that, you're going to want to start looking for homes in your price range so you can make an offer. The next things are after that is you're going to hear things like earnest money, closing costs, escrow, and title insurance. Okay, second step in the home buying process is once we've toured your short list of maybe 3 to 5 homes, the one that you really love that you could see you and your family living in is the one we will be making an offer for. So once we do this, it's basically signing a contract. We're going to make sure that the offer is contingent upon inspection, appraisal, as well as financing. We're also going to have you pay a deposit called earnest money to show that you are intent or quote unquote earnest in the purchasing of the home. The earnest money is applied towards the purchase price if the transaction is finalized. So you're paying this up front, showing your intent, and then it'll go towards your home purchase price at the very end in closing. If the transaction doesn't go through, then you can generally get your money back, though this depends entirely on how the contract is worded and what the terms are. And I can definitely help explain that to you once we go over the contract together. The earnest money is held in escrow by an independent third party, usually the title company, which is the entity that will handle the paperwork for the sale. If the seller accepts your offer, they'll sign the contract, and then you can proceed with having the house inspected and appraised. If they don't agree, then they'll likely make a counter offer by preparing a new contract with different terms that they ask you to sign. The process repeats until you either have a signed contract by both parties, you and the seller, or the deal could fall through because you guys didn't agree to any of the counter offers. So that is the second step here in the home buying process. Okay, the next step is going to be the appraisal. Lenders require an appraisal to determine the value of the property before they can finance your loan. Usually a bank or a mortgage broker will handle this for you, but you will still foot the bill unless it's built into your closing costs. Appraisals typically cost anywhere between $250 to $500. Again, the cost will vary based on the property type, the location, and the square footage. So the house you see here, the appraisal could go well over 500 just because it's a very large home. The value of the property is really the most important factor when it comes to securing financing. That's why it's always important to use a qualified appraiser who assigns realistic value to your home so there aren't any surprises. It is also wise to get an inspection. An inspection is not required, but it is a good idea. You may want to include an inspection contingency in the offer when negotiating for a home. If it's a really hot market, a lot of inspection contingencies can be waived. If you want to be a more competitive buyer, but in a more normal market conditions, you definitely want to get an inspection on the home. So an inspection contingency gives you an out, quote unquote, on buying the house if serious problems are found, or gives you the ability to renegotiate the purchase price if repairs are needed. An inspection contingency can also specify that the seller must fix the problem or problems before you purchase the house. Talk to your realtor, me, to determine a reasonable length of time to do the inspection and how to include it in the offer. So if we were to put a contingency for inspection, essentially you'd probably have about 10 days to contact a number of them, get some quotes, and then of course have the inspection conducted. Usually you want to show up and be there along with your broker or realtor, and just to make sure that you are seeing these things firsthand. So an inspector is going to check the safety of your potential new home. Home inspectors focus especially on the structure, construction, and mechanical systems of the house, and will make you aware of only repairs that are needed, or I guess essentially dire. The inspector does not evaluate whether or not you're getting good value for your money. Generally, an inspector checks the electrical, plumbing, waste disposal, water heater, insulation, ventilation, HVAC, water source quality, potential presence of pests, the foundation, doors, windows, ceilings, walls, floors, and roofs. So it's pretty thorough. Be sure to hire a home inspector that is qualified and experienced. Okay, the next step now is going to be title insurance. Before you close, a title search will be conducted on the home through available records related to the property to make sure that the seller is the legal owner and that there are no outstanding claims against the property. Purchasing title insurance, a one-time fee at closing, prior to acquiring a property is not legally required. However, any lender will require you to obtain at a minimum a lender's policy of title insurance for an amount equal to the loan. This protects the lender's investment in the event of a third-party claim. The insurance remains effective until the loan is repaid. So if you have a 30-year, 15-year, your title insurance is going to cover the whole time that you are paying for your mortgage in case of any claims that pop up. Home buyers will also want to obtain their own protection of the equity in the property, since a lender's only policy extends solely to the loan amount. This requires an owner's title policy for the full value of the home. Typically, the additional cost to add owner's coverage to the cost of the lender's policy is small. All the more reason for any home buyer to get the necessary coverage. All right, the next step is the homeowner's insurance policy. Basically, it's required at closing. So arrangements will have to be made well before the day of closing. Plus, involving the insurance agent early in the home buying process can save you money. Insurance agents are a great resource for information on home safety, and they can give you tips on how to keep insurance premiums low. Be sure to shop around amongst several insurance companies. Also consider the cost of insurance when you look at homes, okay? The next step in that is going to be understanding escrow. An escrow account is used to collect and hold funds to pay your property taxes, homeowners insurance premiums, or other charges when they become due. Most mortgage companies require an escrow account for mortgages with less than 20% down payment. So you don't have to worry about that if you have a higher down payment than 20%. But if you are borrowing, up to 80%, then you will definitely be opening an escrow account. A mortgage escrow service is much like a savings account. The money is paid directly to the escrow service where it is held until payments are due. For example, when you pay your mortgage bill, several $100s per month are added to your payment. That money doesn't go toward your interest payments or principal. This money is set aside in an escrow account and used to pay your annual or biannual property taxes, insurance, and other bills. The account is often established for you by your mortgage company when you take out your mortgage. So an escrow account helps you manage your budget. You do not have to make lump sum payments when your taxes and insurance are due. You have made monthly payments through the year to cover those obligations. Gain peace of mind. You don't need to keep track of when your tax and insurance bills are due. The payments will be made on time on your behalf. Ensure that your home is protected with paid up insurance coverage and taxes. You protect your investment in your home and meet your lender's requirements. All right, the final step is closing. This is the point in time at which the contract is actually executed and the title to the property is conveyed to the buyer, and this is known as closing. This is where you need to read the document you are signing and ask questions if you don't understand something already. There are no dumb questions when it comes to a purchase of this size. It is common for a variety of costs associated with the transaction to be incurred by either the buyer or the seller. These costs are typically paid at the closing and are known as closing costs. How much will closing cost you? Typically, closing costs run from 3 to 5% of your loan amount. In all likelihood, you have already paid some of these fees to pull credit reports, apply for the loan, or as earnest money, a prepaid portion of your down payment. All other unpaid fees and deposits come due at closing. And then once all this is taken care of, money's transferred, titles conveyed, and then the deed recorded at the county. Essentially, at the closing date, you will be receiving your keys to your new home. So, if you have any questions about this process and the steps involved, if I didn't get everything thoroughly explained here in this video, feel free to reach out to me either by comment. My contact information is also going to be in the description. You can message me there, and feel free to either follow me and subscribe to this video. Either way, I look forward to a discussion with you if you have any questions about this process. Thank you so much for watching my video, and I hope you continue to follow and subscribe and see more content that I put out for you guys. Thank you.